Good morning, good afternoon, and good evening, folks, depending on whatever time zones or time frames you guys are based in. I am based in London, so good afternoon from myself. My name is Naeem Nazem. Before we begin anything further, please give me a sound check and screen check, i.e. if you can hear me loud and clear, and then you can also see my screen. Please give me a sound check by saying yes or no. Great. Thank you so much for Kevin, Christian, for the confirmation, and I hope you guys are doing well in your lives, and of course you are also doing well in your trading career as well. It's great to see a lot of same names coming back here as well. Hi Disho, good to see you over here again. So I see a lot of familiar names as always every week, and that's great because this is the markets continuously change, and then you wanted to understand the fundamentals and the technicals that are happening every single week and how they are influencing markets. So by you guys committing to these series of webinars on a weekly basis, you get all the first-hand information, you get to understand what is noise in the market and what is something that you need to pay attention to. So once again, congratulations to all of you. Now, a bit about myself. Sorry, give me 1 second. I do apologize for the little background noise. I think it's my neighbors who are really carrying out some sort of construction work, but it should be gone because it kind of comes and goes anyways. Nonetheless, a bit about myself. I come with a wealth of 15 years of trading experience. During this time period, I worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services as a chief analyst for AvaTrade. Now, before we begin anything else, it is important for me to show this brief disclaimer in front of you guys. If you have any questions or if you have anything in relation to that, please feel free to get in touch with your own account managers. We'll be able to give you a bit more information on that. And here are our social media contact details. The Twitter handle is in front of you, and so is YouTube handle as well. The recording of this webinar, like always, will be available, excuse me, will be available on our YouTube channel. So if you miss anything, if you wanted to go over anything, please, I do recommend you to go over there. In addition to that, we do have several different technical analysis videos that we do upload them on a daily basis. So do keep an eye on those things because they are quite important. Now, speaking of things being important, it is imperative that we go through this AvaTrade's unique proprietary technology called AvaProtect. Now, what is AvaProtect? AvaProtect is basically a revolutionary one-click risk management tool available on the AvaTrade web trader and on the AvaTrade app. With AvaProtect, you can purchase protection against loss for a defined period of time after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the loss directly into the trading accounts. The only cost is the AvaProtect fee itself. Now, I highly recommend you guys to use this particular feature. If you wanted to know a little bit more, get in touch with your own account managers who will be able to give you a lot more information about them. Now, for those of you who attend our webinars on our weekly basis or who have attended our webinars previously, I want you guys to answer this particular question over here. It is why to trade indices, why one wants to trade indices. Can you give me an example or can you help us to understand what are the benefits of trading indices? Because many of you have attended these webinars before. So by you mentioning that and then writing that down, it not only embodies that the validity of that aspect that you understand it perfectly, but in fact, when you are in a situation when you are unsure, because you will know, and then this thing kind of imposes in your head, it makes it a lot more clear. Thank you, Amutha and Frankie, for jumping ahead of the curve and then giving the answers for that. So Amutha is saying there can be big movements in day and hence opportunities for trading. So what Amutha is really referring to is the indices over here, the stock indices over here, they are extremely volatile, meaning they can go up in a day quite significantly, and they can go down in a day quite significantly as well. Like for example, in terms of the Dow Jones Industrial Average, or which is your the US 30, we can expect anywhere of 1,500 point move on a daily basis. Now that is quite a substantial move from a day trading perspective, because if you are a day trader and then you can recognize the right support and resistance zone in terms of these particular indices, which we will in a bit, you can buy them when the price comes to support level, and then you can sell them when the price comes to resistance level. So from a day trading perspective, what Amutha was really referring to, that they are very volatile, just like over here, they can go up quite significantly, they can go down quite significantly, and the movements could be anywhere between 1,500 points. So buy them near the support zone, sell them near the resistance zone. So in order to help your day trading perspective. Now, Frankie is saying that the trading indices is a low risk because it involves several assets. That is absolutely right on the money, what Frankie has said over here, because trading indices, for example, for the US 30 index, which is your Dow Jones Industrial Average, you are not only trading one stock, but you are actually trading 30 stocks across the index, because the index is a combination of top 30 industrial stocks in the United States. So you don't have an exposure to one particular one, but you have an exposure to all the 30 top indices, stocks. For the US 100, which is your Nasdaq 100, the same thing happens over here. You have an exposure to the top 100 stocks in the United States, which are in the tech sector. For the US 500, or which is known as the S&P 500, you have an exposure to the top 500 companies in the United States. Now, just imagine that how much capital would you really need if you wanted to invest in all of the top 500 companies in the United States. But buying the index, by just having an exposure to an index, by buying this particular one, you have an exposure to all the top 500 stocks in the United States, which are part of the US 500 index, by buying one particular one. So you have a diversification by doing that, and that is what Frankie is really saying. Now, Tumelo is saying the indices highlight salient market moves. I do apologize because I am down with flu and everything else in between, hence I have that. Now, what Tumelo is saying, indices highlight salient market moves summarized within the basket of industries. Exactly something what we discussed earlier. That is what Tumelo is really talking about. Now, let's move on to the next important question. And the next important question for us over here really is the inverse of indices. So can someone please help us to understand what do we mean by that? What is inverse of an index or index? Does anyone knows about that? So Henry has said something that, so can someone say it is better trading indices than Forex? Of course it is, because in terms of a diversification, you are exposed to the top 500, top 100, top 30 stocks in comparison to having an exposure to one particular currency. So for sure, trading indices is a lot more less volatile, less riskier, if I would say, than trading Forex. Now, the second question is about inverse of indices, and I'm sure Amutha knows about it, and I'm waiting for Amutha along with everyone else to answer us the question of this one. Now, there you go. So Amutha is saying that this is the fear index. Now, what is a fear index? Now, something that we all know, there is an index called VIX index. Now, this is known as the fear index as well, or it is also known as the volatility index. Now, on the other side, what we have is US 500 index, right? Which is, we know that which is your S&P 500 index. Now, the difference between the two is very, very important, because what we have is when the US 500 index, which is right over here, this goes up or it moves to the upside, the volatility index always and always 99.9% of the time it moves to the downside. And when the volatility index moves to the upside 99.9% of the time, the US 500 index, the S&P 500 index, the Nasdaq, or any equity index over here, it could be any equity index, it moves to the downside. Why that happens? Because when this moves to the downside, that means that there is less fear in the market and traders are willing to take risk over here. Excuse me. So that is what the relationship is. When there is more fear in the market, traders are expected to take less risk in the market. Does that make sense? Let me grab a glass of water and then please shoot me any questions in the meantime while I sip a glass. Okay, so a great question has come by by one person, which he is saying that is it true that then when there is a higher fear in the market, then you should buy the volatility index and sell the S&P 500 index? That is such a great question. And that is what exactly the fear index does. So whenever there is a too much fear in the market, like for example, geopolitical uncertainty about the Federal Reserve, how they will react to things, whenever there is a fear in the market, you could certainly buy the volatility index. For with AvaTrade, it is called VXXB. So that is the name of the instrument on our platform. So you can, whenever there is too much fear in the market, there's too much concern, or you will see this particular one moving sharply to the upside. And what will happen to the S&P 500 index or the Dow Jones Industrial Average? Of course, that is right. So these ones will move sharply to the downside. So one can put a buy order over here and place a sell order on the other side. Or what you could do is just have buy order and wait for this one to come into an important area of support and then trade it accordingly. So that is the relationship. Of course, I will explain that to you guys in a lot more detail when we go into the actual indices and defining levels. Now, the fund flow over here really is a sector flow where the money is really flowing more. Is it the broader market which is really supporting the rally, or is it something only the tech market, or is it the Dow Jones Industrial Averages, like the industrial stocks, which particular sector has the most momentum? And again, that is something that we will look at it very shortly. Now, let me bring out the charts for us, and then let's take the conversation from there, from that perspective. Now, when we look at the US 30, the US 30 index on the daily time frame, what do you guys see from this particular index over here? Let me get rid of this one for the timing. What we see in terms of the S&P 5 Dow Jones Industrial Averages, first of all, we have three important, get rid of everything over here, we don't need anything. what we really see over here is three important moving averages to begin with. This one over here is your 50-day simple moving average. This one over here in orange is your 100-day simple moving average. This one over here is your 200-day simple moving averages. Now, the general concept with relation to moving averages is when the price is trading above these moving averages and it crosses above that, like it did all the way over here, because the price was trading above this, excuse me, moving averages, just except with the exception of here. It tells us that prices are likely to move to the upside because there is a lot of bullish momentum. When the price begins to break below the moving averages like it did over here, what this tells us, the bulls have lost control of the price and the prices are breaking there, likely to fall further. And look what happened. This is what exactly happened. The price fell. It came into this important area of support, which is between 32,146 to 33,340. And then we see a bounce, and the momentum shifted when the price over here moved above the 50-day simple moving averages, and the momentum shifted further when the prices crossed above the 100 and it crossed above the 200-day simple moving averages. But what happened quickly after that is bulls failed to keep that momentum, and the prices started to fall below the 200 and fell below the 100-day simple moving averages. That was an indication to us that excuse me, that this bull momentum that we have seen from here to all the way to here has kind of stopped, and bulls are more likely to lose control of the price, which really happened over here. Any questions on that while I take a sip of water? Okay, so everyone seems to be very comfortable with the concept that we have discussed so far. That is great, because that is what exactly we wanted to see. Now the question is coming, that is this particular trend, this downward trend in the market is going to continue? Are we going to see more of this particular move to the downside, or will we see this particular index, the Dow Jones Industrial Index, moving to the upside? Now, what is happening in terms of fundamentals over here? Now, we have recession fear, serious recession fears in the market. Why? This is because the Federal Reserve in the United States, what the Fed has started to do in the United States is they are increasing interest rate aggressively. And today at 7 p.m., okay, 7 p.m. UK time, we have the Federal Reserve FOMC minutes coming. What we're going to see in those minutes is indication that the Fed is becoming more aggressive towards its monetary policy. It's going to show that the Fed wants to reduce its balance sheet further from its current level. And at the same time, we're going to learn that the Federal Reserve is going to increase interest rate more aggressively than where they are currently. Now, all of this one, balance sheet issues and the interest rate issues, giving very much concern, raising concerns about a recession over here. Because if this is monetary policy over here, if increasing the size of the balance sheet and reducing the interest rate can give to a bigger economic growth, the reverse is also true, especially if it is done too aggressively, which the Federal Reserve is doing that. Now, does anyone know why the Federal Reserve is becoming so aggressive? Why are they increasing interest rates so aggressively? Any clues? What do you guys think? That why the Federal Reserve is increasing the interest rate so aggressively? Correct, Amita. Because inflation is at a multi-decade high in the United States. The Federal Reserve was made a mistake before because they thought that inflation is a transitory issue. What does that mean? They thought that inflation is only a temporary thing. They don't need to worry about it. It will come down. But we all know in our daily lives that inflation is only going higher. Inflation is only and only moving to the upside. Sorry, let me just grab some more water. Henry is raising a very important point over here. So the meeting today by 7 p.m. will affect all the indices, not or just some. No, absolutely. Very, very important question. Now, the meeting, the decision at 7 p.m., which will be coming, it is going to have influence across all markets. The US 500, the Dow Jones Industrial Average, the Nasdaq. Is going to move all the markets at the same time. So keep an eye on that one. Nonetheless, what we are really talking about over here is that yes, the monetary policy decision is very, very important one. And today, if that for those minutes shows that okay, that the Federal Reserve is taking more aggressive stance, we're going to see the fear index, that volatility index moving to the upside. And then what's going to happen with everything else that is going to move to the downside. So where we are. So where we are in relation to the Dow Jones Industrial Average is really that the prices are moving to the downside, and today we are likely to test the 50-day simple moving average. Now the question for investors and traders is that where can we see an important level of support for this particular index? Now for me, the most important level of support comes from here, from this particular level where we did see that double bottom forming sort of right around these particular levels. And we saw the massive rally coming after that. So the prices were very much moving to the upside. And I still kind of wanted to hold that level as a major level of support. However, in the short term, what we could see is we could go into like such as the 4-hour time frame, and we can define another level of support. And for me, that level of support on the 4-hour time frame is going to be right around these particular levels. And then because these are support levels, we're going to change the color for these ones to green. So again, changing the color to green over here. Now, what we see over here is that this is an important area of support where if the price comes into this particular level, this could be very, very great. But at the same time, what I want you guys to pay very special attention to, look at the RSI. RSI has two different components. Number one is 70, number two is 30. 70 is when the markets are overbought, and 30 is when markets are oversold. Whenever it comes over here, like it did over here, like it did over here, what happens in the market is market moves to the upside, like it did over here. Now we are once again coming to those particular levels. Of course, our support zone is over here, slightly bit lower, and that means the RSI can come up to here. But at the same time, what I do want you guys to understand is that the prices may not go all the way to that particular level as well. Especially from a day trading perspective, this could be another level which could be well worth of taking the risk in terms of the price action. So what you could do is you could consider this one as your support level. And then you can consider this one as your support level, and then wait for the prices to come even into this particular support level. So we have three different important support levels. When the FOMC decision will come, it is very likely that the prices will move from these particular price points, and then we could see pretty decent moves in terms of the indices. Now let's look at the US Tech 100 or the Nasdaq 100. What's happening with the US Tech 100 or the Nasdaq is exactly the same as the Dow Jones Industrial Average. See how the price rejected the 200 and the 100 simple moving average. In terms of the Nasdaq, that is same happening. Price rejected the 200 simple moving average. In fact, the Nasdaq or the tech sector is telling us the prices aren't that strong, because over here price didn't move above the 200 simple moving average. It's literally tested, and then it moved to the quickly to the downside. What happened with the Dow Jones Industrial was that the prices did move to the upside, like you can see over here, but over here we don't. Now the prices are quickly moving to the downside. They're going towards the next support zone, and that support zone for us, that could be anywhere between around these particular levels where the 50-day simple moving average is trading. So that price level is going to be 14,164, 14,315. So that is your support level. Now, in terms of your 4-hour time frame, of course, we have the same sort of things happening, just like how the Dow Jones Industrial Average was on the 4-hour time frame. Prices are oversold in terms of the RSI. The RSI is showing over here as well. Again, the same sort of a concept becomes very clear. Every time the RSI is kind of near those particular levels, which shows that the RSI is very oversold over here or oversold over here, we do see a tremendous upward move in terms of the price action, just like how we saw it over here. And then, of course, we saw it over here. And then when is over here, when the RSI shows that prices are way overbought, then we do see the prices coming to the downside as well. Now the RSI is over here, so we would expect the prices to fall a little bit more, because we want the RSI to go into much more deeper territory, because what we really wanted to see, the RSI is coming into these ones to go further below the 30, because the further deeper into 30 it is, the higher the chances that the price will reverse its direction very quickly. So this particular price level, this particular support zone that we mentioned over here, if the price continues to fall the way that it is falling, it's going to push the RSI even more lower, increasing our odds of success of this trade becoming more profitable. So I'm going to hold that particular price level as it is, and then we will wait for the price action to come over here. At the same time, there is a probability that the price may actually, it may not go all the way to that particular price level. So from day trading perspective, you do have two levels. You have one level over here, and then you have another level over here. So keep an eye on both of these sort of price support zones, because both of them can very much have the ability to push the prices to the upside. Now let's look at the Dow Jones Industrial Average. What the Dow Jones Industrial Average is telling, the S&P 500 average, S&P 500 index is telling us that it is the strongest index out of all the three indices. Why is that? Well, look where the price is trading with respect to the 50, 100, and 200 simple moving averages. It well above both of them, and now it has fallen below both of them like the other two indices, but it went quite far up. So that shows us that the S&P 500 index or the overall broader market is looking much stronger. So meaning there are still chances for this particular index to continue its journey to the upside. Now, of course, where is that option for us? Because we are coming towards the end of the webinar. Where is the important support zone? The important support zone in terms of the price action is really going to be just right over here, or that 4,439 to all the way to 4,464 sort of a price level. That is the area where I am more focused on in terms of the support level. If the price comes over here, this could be a great opportunity. Remember, the RSI, like other two indices, is already oversold, but at the same time, we do want to define another support zone as well. And another support zone I'm going to mark it where the 200-day simple moving average is trading on the 4-hour time frame. So we have two different support zones in here. Now, the fact that we have defined all of these particular price levels, keep an eye on them today as we move along, because at 7 p.m. today, London time, 7 p.m. London time, the FOMC minutes will be released, and they are very much likely to move these markets. Remember, you can watch the recording of this one on our YouTube channel, and stay safe, and I will see you guys same place, same time next week. Thank you and happy trading.